Futures trading is risky and can result in substantial financial loss.
Good morning, ladies and gentlemen. Good morning, afternoon, good evening, traders from across the globe. I am really excited about something here. And you know me, I never get excited about anything. But wait until you see this. I am telling you, you will be as excited as I am. I have a video clip that we're going to go to in just a few moments. I want you to indulge me and watch this clip because I'll tell you right now, the markets are at a pinnacle, traders. The markets are at a pinnacle. And my question to you is, have we not seen this movie before? Well, you know what? I think we have seen this movie before. To me, this is a rerun, and I'm going to show you a rerun of a video we did August 17th, 2007. I want you to take a look at this next clip coming up, and then you're going to compare it to the charts I have on the board right here behind me, because I think you will see an absolute correlation between that video on August 17th and this video I'm about to show you now. Before we get to that clip, and traders, there's a bunch of charts that are going to come up in that clip, but it's worth the watch. You should watch it. But before that, I have to tell you, I received a testimonial from one of our Omniacs today, and wow, what a testimonial. Really, really touched me. So the reason why he wrote me this testimonial is because of the video you are about to see on the rerun and about what I'm going to show you here. These are techniques and a way that I present the markets and teach my Omniacs to view the markets technically. And here is a response that I got from one of my Omniacs, and thank you so much for this. Wait till you hear this. This is just beautiful stuff. It says, gang, you should be showing up for the daily classes. Seeing is believing. Would you sail a ship without a compass? If so, why trade these stormy markets without the Omni Compass? The Omni Compass, huh? How about that? Don't let your portfolio end up like the Titanic. Join these classes. Shamil. Shamil, thank you so much for that. Thank you so much for trying to get these Omniacs who aren't already coming to the classes to see what we're doing here, because traders, we really bang up this technical analysis between our crowd amongst one another. We have a lot of great techniques to show you, and I'm going to take it to a flashback right now to show you something. Then I'm going to come back and show you more charts, so you better get something to eat, something to drink, and a chair, because this is going to be a long one, but well worth watching. Take a look at the flashback, traders. I'll be right back to you. Tsunami, you never know what the fundamental will be, but the charts tell you something major is about to take place. And I am going to teach you, traders, a technique. You Omniacs out there, pay attention, because I am going to teach you a technique that will help you call winning trades for the rest of your lives. For the rest of your lives. I am not joking. When I'm done with this chart segment, if there is anybody watching that isn't convinced, call me and I'll explain it and make it even more detailed. Let's go to the charts, and you tell me when I come back from these charts if you think I'm crazy or if we've seen this happen telegraphed by the analysis before the event took place. Take a look at the charts, traders. Stay tuned and I'll be back to you. Okay, traders, this is the 200-day moving average. You've heard me talk about the 200-day moving average all week. It's the 200-day moving average on the Dow Jones Industrial. You see it? We hit it. We went through it once, violated, and the market exploded. And something came out in the news the day we hit that. That's the Dow Jones. Next on the block, the Dow Jones Utility Average. 200-day moving average. We went through it one day, piece of fundamental news came out, and we blasted off above it. Another chart by the 200-day moving average. What do you know? Oh, what's this? A 200-day moving average? Isn't that amazing? We're at a 200-day moving average. The Fed makes a move, and we get an explosion away from it. Another chart. This is the SPX. And what do we see here? Oh, the NASDAQ, a 200-day moving average. We're at the 200-day moving average
A piece of fundamental news comes out, and away we go. What do you think? What do you know? Could it be coincidence? I don't know. Let's keep looking. What's this? Euro dollars, not euro currency, euro dollars. What do you call this? 200-day moving average. What happens? Fundamental piece of news comes out. Another market at the 200-day mover. Something's going on here, right? If you're a technician and you've seen this, you have to know something's going to happen. Let's keep going. Cotton, okay? Cotton's not an indice. It's not a financial. Cotton, 200-day moving average. Hits it once, Fed comes out. Something happens, at least a bit of fundamental news is supposed to come out. According to this, boom, you've seen it in the charts. Fed makes an announcement. Market pulls away from the 200. That's cotton. Bean oil. Look how close it gets to the 200-day mover. Something's going on here, wouldn't you agree? Look at how many charts are by the 200-day mover right when a big piece of fundamental news is about to come out. 200-day moving average is that blue line you keep seeing on every chart. Let's go forward. Soy meal just touched the 200-day moving average. Something's going on here, right? Piece of fundamental news comes out, and we start moving higher. Next on the block. Soybeans. November soybeans. 200-day moving average. We just about get to it. Boom. Market goes higher after that. What's going on here? Could there be a coincidence? I don't know. You tell me. Let's go further. Next on the block, live cattle. What does live cattle got to do with the fundamentals? I don't know, but you hit a 200-day moving average when everything else is about to hit the 200-day moving average, and away you go. What happens? You see that there's a reason why you might have to shift the market in a new direction, and a piece of fundamental news comes out. What do you know? I'm becoming convinced that the news is already in the charts. You tell me if you think anything different's going on. Let's go further. Copper. Hey, what's this? Could this be a 200-day moving average again? And what happens? You violate it once, boom, the copper takes off. The same exact day that every other chart I have just illustrated to you had come to a 200-day moving average, and suddenly a big piece of news came out. My Omni was beaming when I seen this going on. I knew there was a fundamental shift taking place. I said it to the traders in my premium room. I went through a lot of charts with them, and we're not done yet. Stay tuned. What's this? Dollar index. Oh, it rallies just about, hits the 200-day moving average, and turns around and breaks. Another market at the 200-day moving average, and something happens when it gets there. Could this be coincidence? Do you still think it's coincidence? Or do you think possibly the 200-day moving average has something to do with the way the world views the commodity markets? Let's go forward. Euro currency. 200-day moving average. Euro currency hits it, turns around and rallies out. Another market at the 200-day moving average. I don't know how many. This is probably market 15 already. It doesn't stop. Let's go forward. Japanese yen. What's this, a 200-day moving average? Look what happened when we got above it. Boom, boom. Above the 200-day moving average. Look at that move. It just got there a day and a half ago. Another market that comes to a 200-day moving average when 50 other markets get there and something happens. What happened in this case, the fundamental that came out, was the Fed cutting interest rates. Last time I seen something like this, it was another huge piece of news. Once before when I seen it, it was the Russian coup. But when you see a lot of markets lining up to the 200-day moving average all at the same time, remember what you learned from Oscar here. Something fundamental is about to give, and something big. Let's go forward. Next on the block, British pound. What do we call this little wiggly blue line? Oh, what do you know? The 200-day moving average. And what happens? Massive rally out of the hole. British pound hits the 200-day mover, and away we go. I'm beginning to be convinced that this is a little bit more than just a coincidence. I don't know, traders, you tell me. Let's go forward. The Brazilian real. Let me say that again. The Brazilian real. 200-day moving average. Look what happens when we hit it. The Brazilian real. What's going on here? 200-day moving average. Again, like every other chart, they all lined up like the stars were lining up together, and suddenly something happened. What does this tell you? The next time you go through charts and you see all these charts lining up to the 200-day, rest assured something big fundamentally is about to take place. It always comes out in the technicals first. Australian dollar breaks the 200-day moving average for 1 day, turns around and has an explosion. Another market at the 200-day moving average, it stemmed the tide after 3 massive down days, hits the 200, the same time everything else does, fundamental news comes out, and a shift takes place, and away we go. The Norwegian Corona. The Norwegian Corona, I'll say it again. What could be going on here? Is it possible that was still in coincidence? I don't think so. 200-day mover, Norwegian Corona, has a big rally as soon as it gets close on the exact same day that every other chart I have just showed you has had a massive move either above or below the 200-day mover. The Czech Corona, 200-day moving average, it gets right to here, turns around and has a massive day up. Another market that comes right into the 200-day or gets close enough to it and explodes in the opposite direction. It never ends, traders. This is just 20 of many examples that I can show you. I went looking through charts, and this is what I found, and I thought, let me explain it and present it to my Omniacs, because you can make a living off of the 200-day moving average used correctly. I hope this chart segment convinces you of that. Okay, traders, so did you just see that? I got a question for you. Knock, knock. Who's there? 200. 200 who? The 200-day moving average. You seen it in all these charts. What else could it mean? Are you kidding me? There is nothing else that you need to know. If you learn nothing else from me, when you see all the charts that you follow coming to a 200-day moving average at the same time, I am telling you, don't listen to anybody else. Listen to what you learned here and get yourself positioned for the opposite direction.
Traders, you've just seen that flashback? You think that was something? I'll tell you right now, those markets all blasted off or dumped right after that video based on that moving average. Markets do not come to a moving average that frequently. A whole bunch of array of different markets all coming to one moving average at the same time without that meaning something. Now, with that in mind, I tell you that we are at a pinnacle in these markets. And when I said, have we not seen this movie before? Well, you just seen the flashback, right? Let's go to the charts now. Let's not waste any more time. I want you to see what's set up here before our eyes and how to read these charts like a painting, like in that last video. Let's go to the charts, traders. I'll be right back to you. Okay, traders, what we're looking at here is the June S&P daily bar chart with the Omni Trading Academy's proprietary moving average overlaid. The last video, that clip you just seen, that was the 200 bar or 200-day moving average. This is a different average. It's one that we teach to use to our trading students at the Omni Trading Academy. And watch the picture I'm about to paint for you. The S&P June market goes right to that proprietary average today and stops cold. Stops cold and starts to break down. That's one. That's the S&P. I'm going to do this quickly, so pay attention. Next on the block, NASDAQ, June daily bar. NASDAQ goes right to the Omni Trading Academy's proprietary average and begins to drop. That's two now, traders. Keep your eyes on this. Let's see what we got next. This is the cash S&P market, traders. And what do we see here? Oh no, could that be? The Emini Trading Academy's proprietary moving average. Yes, guys, it's something like that. Here it is, that exact same average. The market hits it and proceeds to break down. That's the third one. This isn't going to stop, traders. Watch this. The Emini Russell, the ER2M8, if you will, the June contract for the Emini Russell. Look at this, traders. Once again, it comes right to the Emini Trading Academy's proprietary moving average. It goes right to it and gets ready to break and then starts to break down. That's where we ended up yesterday at the end of the day. There is more. Stay tuned. The next chart you're looking at is the Dow Jones Industrial Average. And what does it do? Once again, it goes right to the Emini Trading Academy's proprietary moving average. Traders, you can't make this stuff up. It hits the average and starts to break down. This looks very much like that flashback I just showed you, only now we're not using the 200-day moving average, but it is the same thing happening. Markets all over the place are rushing towards a certain average right here, and I want you to see this for yourselves because I think the next move is down in the indices. Let's keep looking. Next chart I'm about to show you is Canadian dollar, June. The Canadian dollar. And what does it do on the same day as those other markets? It goes right to the Emini Trading Academy's proprietary moving average. Right to the average and then starts to break down. Traders, this isn't going to stop here. There's more. That's how many charts have you seen? That's probably the fifth, right? I'm looking around. 1, 2, 3, 4. This is the fifth one. Let's keep going. Next chart you're about to see is the CRB index, the cash CRB index, which is the CRY. When that is going up, the S&P is likely going down because this shows you inflation. And what does this one do? It runs right up and it hits the Emini Trading Academy's proprietary moving average. It hits it and takes off. Now that is absolutely counter what the stock market's doing, and it should work opposite the stock market. So that is showing us that there's more to it than just the Dow Jones and the S&P and the NASDAQ and the ER hitting that. Now there are other markets that would work counter those markets hitting that average at the same time. Let's look forward. Bonds traders, 30-year bonds, the U.S. June bond market. What happens here? Once again, who would have ever thought this was going to happen? The market runs down and the same day, 2 days ago, hits the Emini Trading Academy's proprietary moving average. Once again, traders, bonds hit it and rally. When bonds are going up, S&P is going down. When inflation's going up, like the CRB, S&P is going down. I can't imagine this S&P going anywhere else. Let's take a look forward. Traders, now you're looking at the gold market. This is the June gold, and what does it do? It comes to the Emini Trading Academy's proprietary moving average. It hits it and starts to run up. If gold is going up, the likelihood is the S&P is going down these days, the way the markets have been trading. Well, gold bounced smartly off that, while the S&P and NASDAQ and Russell and every other index that we follow bounced off of it on the downside and started going that way. Traders, are you starting to see the picture here? This is why I got so excited tonight. I'm sitting doing my homework, and I finally come up with an S&P trade. You know, we stayed away from the S&P for 3 days because it was at a pinnacle. And a pinnacle, no one knows for sure which way it will go from that spot. But I say down because of all the indicators wrapped around the index markets, as well as the bad news that's out there. And now look at these charts. The ones that work counter the index markets are going right off that average and going the other way. Well, if we just hit the average yesterday in the last couple of days, if we just hit that average in the indices and it's starting to go this way, and the other ones that work counter are going that way, well, you know what, traders? That tells me that we got a picture here. We have to look at this like artists. This is a fine art. It's not a science. These charts are an art. And if you look at a painting and you can critique a painting, you should be able to look at the artwork before your eyes and critique where the markets are going to go. Let's look at more charts. Traders, you're looking at silver. The market does the same thing. It bounces off the Omni Trading Academy's proprietary moving average. The Omni Trading Academy's proprietary moving average, it hits it and goes up. When metals are going up in today's environment, as we've seen, that means the S&P is likely going down. Metals help create inflation. Let's look at one more chart. Look at the palladium market. What does it do, guys? It bounces off the Omni Trading Academy's proprietary moving average and turns around and takes off. Another metal that would create inflation, pushing the S&P down. And as I've shown you, the S&P just hit that average and is heading back down again. Traders, I don't think you need to see anything else. You know what? There are about 8 more charts I'm not showing you right now with that same exact look. It's either hit the bottom of that average and dropped, or it hit the top of the average and took off, all at the same time. Traders, do your homework, pull your charts and tell me if you don't see this exact same thing. Okay, traders, so you've seen those charts, right? I got one question, just like I had in the last video. Knock, knock.
Who's there?
Who's there? The Omni Trading Academy's proprietary moving average. Traders, you've seen all the charts. There is no denying that something is going on there. In that last video, right after it, those markets exploded in the same direction. They were bouncing off those averages. That is what I see happening here. With that in mind, traders, for Tuesday, April 8th, 2008, we have a red Omni in the S&P. We got a red Omni in the NASDAQ. We are looking to get short both of those markets. Get your orders in, traders. If you don't know where to place orders to try to capture this downside, come on down to the Omni Trading Academy. It's www.livewithoscar.com, and let us teach you the techniques that I'm showing you here on the board, and we'll tell you where to get in and get out, hopefully, of the S&P and NASDAQ without getting your tails clipped. Traders, I'm going to say this again, as crazy as it may sound, until those charts prove me wrong. Do not fall in love with the upside. There it is. Do not fall in love with the upside here. Yes, of course we could go up, but according to what I'm looking at, it doesn't seem possible technically. The fundamental news is about as bad as you're going to get. Alcoa's profit came out at 50% less than expected yesterday. 50% less. And that is not going to be the only company that fails to meet profit objectives. You will see these markets have more weight on them than they do have the buoyancy to go up. So I am telling you again, don't fall in love with the upside unless we settle above that average in all those markets that were below it, and we get below that average in all those markets that are now above it, including the CRB, which makes up 16 other commodities. You got to get a lot of movement in the opposite direction of what we're seeing now in order for that to happen. So with that in mind, red Omni for tomorrow in the S&P and the NASDAQ. Traders, if you like the techniques that you just seen here before your eyes, make sure you come on down to the Omni Trading Academy, grab yourselves a membership, and I'll be more than happy to teach these techniques to you. All right, we got the Mandalay Bay coming up, babies. It's coming May 12th, 13th, 14th, and 15th. We are doing live shows at the Mandalay Bay. It's called The Money Show. We have a booth in one of the aisles at The Money Show. I have 2 speaking appearances, and we will be there for the whole week for all you Omniacs to come meet us. So come on down, traders. Come to Vegas. There's 1,000 reasons to come to Vegas, and you can meet us to boot. So come on down to Vegas and come meet us during the week of May 12th through the 15th. All right, traders, we got a lot of videos like this. I know this was a long one, but it was worth sitting through. And you can find 297 videos, a lot like this one, with a lot of techniques for you to learn from at our YouTube spot. When you go there, please leave comments on the video about what you think of our analysis, and don't forget to subscribe to those videos. You can go to youtube.com/futures analysts. There, if you hit the subscribe button, you will know when our videos are coming out next. All right, traders, another thing that we've been doing for months on end here, we are on the radio every Friday from 9 a.m. to 11 a.m. Omni Standard Time, OST, 9 a.m. to 11 a.m. every Friday on the radio. You can call into that radio show and speak to us live on the air. Mikey, you'll put the URL down there for me, or above me, or wherever you got to put the URL so they'll know where to go, and the phone number?
Yes.
All right, so you'll know where to go every Friday. Make sure you listen to the radio show. Traders, don't trade alone, never trade alone. Make sure you come to the Omni Trading Academy and join us, ever-growing army of Omniacs. We hang out in the rooms every day where there is cameras on me and a live microphone. There's also a camera above our heads watching the whole office. You can see what we're doing, you can hear what we're doing, and you can participate in our classes that we hold just about every day. And the techniques that we present are much, much more in-depth than the ones you just seen in these charts behind me. So make sure you come on down and learn how to get this right for yourselves. Look, traders, trading is one of the hardest things in the world to do, and to be successful at it, you got to work at this every day and every night, and you got to learn as often as you can and as much as you can about technical analysis, and that's what we're all about here at the Omni Trading Academy. So make sure you come on down. If you don't want to come down, give us a call, 702-629-4755. We're here all the time, traders. And always continue to send us your emails. The feedback is great. I answer every one of your emails. If you do homework, and homework consists of doing some analysis on a chart, drawing your trend lines, pulling up your indicators, and finding out if what you think will happen looks like a good technical picture, draw those charts up and send them to me at oscar@futuresanalysts.com. I will reply to your homework, as I always do, and tell you what I think about the work that you've done. All right, traders, that's just about it. I got to get back out there and watch this S&P before it tumbles on me. And don't forget to say this to yourselves every day, every morning, every afternoon, every evening. Brushing your teeth in the morning, driving the kids to school, when you place your orders. Say it when you're showering. Say it all the time, because this will really help you. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.